All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. My name is Aaron Basil, and I'm going to be wrapping up the charts this week. And what a week on Wall Street. Finally getting some volume and some volatility, although admittedly a lot of that should have been expected as we had FOMC this week. We also had quad witching options expiration, so everything across the board expiring this Friday. So, a lot to cover here. Friday, complete bloodbath on Wall Street. S&P down 1.35% here, and we had heavy volume for the first time in a while. 118 million shares traded. This is the high volume sell-off I was looking for. It's the one I've been talking about, and I cannot stress to you enough how important what I'm about to go over is. So, we have this trend line here that I've been pointing out for a little while. That is now broken. There's now some chart damage done to this, and this could accelerate into a sell-off very quickly. So these trend lines, this is just, I'm drawing this on here. I'm like a kid with a crayon drawing, but you have to understand the algos on Wall Street, the quants, they pick up on this stuff. They see this stuff as well. And they are sending signals to whoever their fund is or bank or whatever, and telling them that there's weakness. And these fund managers have to decide what they're going to do now, because there's lots of funds out there that won't even pick up stocks if they're below their 50-day moving average, and so on and so forth. And you do all this quantitative analysis. But bottom line is this is broken, and that's telling you that now there's technical damage on this chart, and it could set up to move lower. For instance, if you look in the past, the triple Qs here, you can see we had this trend line back in 2020, and that was a strong trend. It broke, and as soon as it broke, you went back up to back test it, couldn't make it there, and you sold off again. Then you put in this other trend line at the pink line. You broke through that, back tested it, couldn't get above, and so now you've got this other blue trend line. But the point being, I can just spot this with my naked eye and draw a line on the chart, and it's the same line is going to be followed by these quantitative programs. So that trend line break is very important to me on the SPY. But possibly even more important than that is the fact that we sold off on a Friday. And if you've noticed, pretty much for the last year at least, the market has been saved every Friday. If you look at this day right here, March 5th, we were in danger of taking out this low pivot from February, and this market was about to roll over, and somebody came in and saved it on a Friday. Again, here we had lots of selling this week as well, and they saved the market, and then on Friday they blasted it higher. The reason why they're doing this is because they understand, they being central banks and the powers that be, they understand that when the market has a bloodbath on a Friday, the chances of a Black Monday increase exponentially. And I don't say that lightly. I'm not going to be one of those guys who sits here and predicts a complete meltdown, but I am saying the chances are a lot higher of it actually happening. For instance, actually, I pointed this out yesterday in my live stream and on Twitter. This is kind of, and again, excuse me for posting this bear porn, but I gotta talk about this. So you have last year we had the obviously an uptrend, then you had your first little dip, and then you had a little double bottom and a little rollover, and then we had the cascade. Well, we're kind of seeing the same sort of thing here. Just kind of the melt up. You have a little dip, little mini double bottom immediately afterward, and then now potentially rolling over. So it's I don't want to get anybody too excited, but there's some really serious problems out here with the market. If you look at the dollar index, dollar just ripping faces off this week. And this is, I mean, when you see wide range candles like this of this magnitude, this is more than just a counter trend rally. I believe on Wednesday or Thursday, yes, Wednesday, the dollar posted its best day in over a year. I mean, this is not, I mean, these are huge, huge, huge reversal candles. If you look at the weekly chart, like this is a very big threat. You haven't had a candle this size really since March of 2020 on the weekly time frame. They're now closing above the 50 moving average. I do think it could stall out a little bit here, but man, if the market gaps down, I'm very interested to see where the futures open on Sunday night, because there's some serious problems. Now the one saving grace for the bulls, the bullish case, is that the Qs held up really well. If we look at the intraday here, Qs kind of just chopping in this range, only down 0.75%, while everything else was getting bludgeoned. So if you have this little rotation into tech, that could help keep the markets buoyant from having like a complete broad-based sell-off. But I mean, look at VXX into the close yesterday. Even as the market was just chopping sideways, VXX was in an uptrend all day. That tells you that there's people who are nervous about holding into the weekend. They're buying put protection, they're buying volatility, because I mean, when you have this type of a Friday sell-off, again, like you can have a limit down on Monday and it could get very ugly very quick. So this is, there's a lot going on here. That said, let's take a look at gold here. So gold getting beaten down pretty badly. I gotta be honest, I do not like what it's doing right now. This is a pretty brutal sell-off. I do like this support level, but the velocity in which you got there, it tells me that there's a lot of strength to it. The weekly candle is pretty ugly. You close below this wide range green bar here, and it looks like it wants to go down and test double bottom. However, medium-term outlook isn't terrible, because in the second half of the year, gold could very well turn into a fear trade, and that could cause it to reverse higher and get right back into its uptrend. If we look back at 2008, you had this massive sell-off on the monthly time frame, no less, and it was able to reverse higher and eventually thrust into new all-time highs. And if you watch my long-term analysis of gold, this is kind of where I believe we are in the cyclical bull market. So it would make sense that we would have one big flush out and before reversing higher. Moving on really quickly, I actually kind of like silver here a lot more, just on from a technical basis. But silver is still holding its 200-day moving average, and you still have this upsloping trend line. So silver actually holding up really well compared to a lot of things, even though it did get hammered pretty hard, which is surprising because silver is an industrial metal, and with the dollar rising as much as it is, you'd think that silver would be selling off a little bit more. But so you know, silver in a much better position. But yeah, moving forward, the new indicators I'm looking at really, so you guys know I've been harping about the transports, which, by the way, I was harping on them for a reason. You see, I saw them starting to reverse and break down, and look what we got. And the same thing with the home builders. Saw the weakness there, and again, it turned out to be a leading indicator. XLF getting smoked as well. So the financials coming back in. Now, I think these stocks these equities are not really what I'm going to be looking at next. What I'm looking at next is IGV, cloud software. I'm looking at the semiconductors, which are always looking at the semiconductors, but really keeping an eye on it. And I'm keeping an eye on the triple Qs, because if there is a rotation out of these high yield plays, like the financials and energy and so on, it's going into tech, and I want to see if tech holds up. If tech holds up, then this market can hold up, because right now this is the only thing keeping this market up. So those are the three areas that we're going to watch to get clues on what the next move will be. But that said, I'm going to wrap it up here. I'm very interested to see where we open tomorrow night at 6 p.m. And what we do Monday as well. So the only other thing, again, with the when I talked about the bull bear case, the other thing that you could make a bull case for is that this week was a quad witching OPEX and the end of quarter. So you could say, well, some of this volatility had to do with options expiring. And that's probably true, but some of the moves that we've seen are a little bit dramatic for them to just be OPEX related, in my opinion. But anyways, you guys take care. Thanks again for watching, and we'll see you later on the chart.